And you're watching ET Now.
Hello and welcome to this very special interview. I have with me Mr. Y.M. Deosthalee, the Chairman and Managing Director of L&T Finance. Mr. Deosthalee, welcome to ET Now.
Thank you.
L&T has struck a non-binding agreement to merge the general insurance business with Future Generali. I mean, you are a relatively small player when it comes to general insurance. How do you see this pan out in the next 2-3 years? Is it going to be a huge booster for the company or for the business per se?
It is an important transaction. First of all, let me clarify that it's a non-binding term sheet which has been signed. The intention is to merge L&T general insurance business with that of Future Generali's general insurance business. So there are three parties involved in this: Future Group, Generali and L&T. So if the transaction is completed, and when it is completed, the resultant shareholding will be L&T will be 51%, Generali will be 26%, and Future Group will continue to hold 23%. So this is going to be the structure when the transaction is completed, and our intention is to have this structure subject to regulatory approvals, subject to all other approvals which are required. It's a very important transaction for L&T. As you rightly said, we are a relatively new entrant, and because of which our size is small. Last year we were about 143 crores of gross written premium, whereas Future Generali was more than 1,000 crore. So the combined entity is a reasonable size entity, is a large entity. Scale is important in this business. So from L&T's point of view, it enables it to scale up substantially at a faster pace. So it will be a 6 to 7 times bigger entity. Secondly, it will also enable the general insurance business to break even faster. Because of the combination, we believe that the break even should result much faster than what would have happened if L&T had continued in all by itself. The third thing, and which is also quite important, is that this is happening without any significant increase in capital requirement. So with the similar amount of capital requirement, we are scaling up. So I think it's a very important transaction from L&T and L&T shareholders' perspective.
Roughly speaking, what would be the investment like? Around 550 crores that you're looking at?
No, we can't comment on that right now, because it will all depend on the due diligence exercise. It will also depend on the structure. So today we can't comment on while we have agreed broadly on the valuation parameters and measures, but the exact amount we cannot comment today. However, it will be known the moment we finally close the deal. What I'm trying to tell you is that based on the indications which we have, it's not going to be higher than what we would have otherwise invested if we had. So what it does for L&T is that much higher scale, profitability with the same amount or similar amount of capital which is invested. That's why I'm saying it's an important transaction for L&T.
In fact, once the deal is completed, Future Group will continue to hold around 23% stake in the venture.
Yes.
Are you also parallelly negotiating with them to buy out that stake at a later stage? Is there an ROFR that L&T will have?
As you know, post-merger, the way in which it is going to be structured, L&T will continue to have 51% shareholding. So we don't expect L&T to go beyond that. However, as and when the regulations permit, the partner will have an opportunity to buy them and go up to 49%. So the things will unfold in that manner. That's what it looks like. That means we will continue to be 51%, but if the regulations do not permit, they will continue in the venture. So it's likely that after some time, we don't know when that is going to happen, as and when it is permitted, the partner will buy them out.
So this will be subject to the regulations allowing foreign companies to hold 49%?
No, the deal is not subject to that, because in any case, Indian entities will continue to own 74%. That means L&T plus Future Group will continue to.
So what I'm trying to understand is, if the rules continue at 26% for the foreign company, this structure would you will also look at buying out the Future stake?
We haven't thought about that. That is not what is envisaged. What is envisaged, or maybe what is more likely, is that as and when the regulations permit, the partner will buy them out. But you never know. After some years, things can change. But today, as it stands, it's going to be this structure: 51% by L&T, 26% by the partner, and 23% by
And have you also spoken to Generali in terms of their interest in the venture? Are they keen to scale it up, their shareholding to 49 once the regulations permit?
Generally, all the partners will be interested because they are a very large player in the insurance business. They operate in more than 60 countries, and they have more than 60 billions of gross written premium all over the world, including life insurance. And in this business also, they have more than $26 billion revenues, gross GWI. So if you look at that, not naturally any insurance company which is so deep in this business will be interested, and I'm sure they will also examine it, and I should say they will be keen.
And once the deal gets completed, what's the kind of growth that you see in your general insurance business?
It's not, if once the deal is completed, it's not going to be our general insurance business. It's a combined.
Yeah,
it will be,
but you would be the majority shareholder.
It will be a merged entity. So as I said earlier, if everything remains as it is, we will be 6 times bigger than that. Insurance industry has been growing. General insurance industry, if you look at the last few years, has been growing at 20%, 18 to 20% on year basis. So there is a healthy growth. In addition to that, there are areas which have potential to grow faster. For example, health insurance is one such space where there is a possibility of growing faster. There are other products where after exploiting the synergies between the two entities, it will be possible for us to grow. But it is suffice to say that it will have a healthy growth, because all the players in the industry have shown very healthy growth. We have also grown, but of course we are on a smaller base, and they have also in the last 5 years have grown at around 25% plus. So there is no reason to believe, considering the brands of both the companies, considering the fact that they are a well-renowned large insurance entity, and L&T being a very large or a respected brand, admired brand I should say, in the country. It should be possible for us to maintain the momentum, sustain the momentum going forward as well.
In fact, over the years, L&T Finance has transformed itself into a comprehensive financial services company. I mean, what's the kind of targets you have when it comes to the retail business, the infrastructure lending business?
We are building a comprehensive financial services business because we believe that that's the way to go forward in financial services. There are a number of reasons for that. The first reason is that if you are a niche entity, or if you are only in one area, there comes a time when your scaling up becomes a problem. And in that case, then the margins, profitability, all those issues come up. So from the point of view of growth, as well as from de-risking perspective, it is important for you to have a diversified portfolio. And if you look at in Indian market today, almost all serious players in financial services are in number of areas, and that's the way to go forward, because there is a scope for growth in many areas. So one is from the point of view of growth, as well as from the point of view of margins, this helps. The other important point is that financial services is not deeply penetrated in all the areas today. So market is also there. The third thing is that as far as L&T Group is concerned, it is a professionally managed group, and it is known for attracting, retaining and nurturing talent. Financial services business is a talent-oriented business, and we have demonstrated over the last 6-7 years that we can attract, not only attract and retain talent organically, but through the inorganic transactions which we have done, we have provided opportunities for career growth for various employees. So I think it makes tremendous sense for us to be to have a diversified portfolio. So ultimately, if you want to be a serious long-term player, comprehensive growth, comprehensive approach, diversified approach makes lot of sense. And last point is, personally I believe that financial services, if you are a very, very serious player, is a perpetual business. And you can create that kind of perpetuity only through diversified growth.
In fact, the reason I asked about infrastructure finance is because the infrastructure sector as a whole is seeing signs of slowing down. I mean, it's becoming a sort of a concern for the country at large. You being a player which is deeply entrenched into funding infrastructure projects, how do you see that panning?
Before that, let me deal with your earlier question in a bit more detail. You asked about retail financing, infrastructure finance. Yes, we are present in retail infrastructure. So what we have done is that over the years, we have built skill sets to assess different types of risk. So initially we were financing equipment. So all risk relating to equipment, we created those skill sets, and today we finance all types of equipment, be it construction equipment, commercial vehicles, small commercial vehicles, and now in the form of consumer financing, cars, if you consider that as an equipment. So all types of equipment we finance. Later on, we built skill sets around infrastructure financing, which is project appraisal, project financing. And I'm very happy to say today that in the last 6 years, this business has stabilized extremely well, and we are today addressing the entire infrastructure space, which includes power, roads, then ports. Similarly, the other types of infrastructure like education or healthcare. So skill sets have been built to assess risk involving this type of projects. And then lastly, we have now recently acquired a housing company for looking at assets which are emotionally important to the customer. So those are the skill sets which we are building. So I think we have from income generating assets to emotionally important assets to consumables, if you will. Those all that entire gamut we are addressing today. So today, yes, you are right, infrastructure sector, there is a slowdown, there is no doubt at all, but there is no compulsion for us to aggressively grow in that sector given the current situation, because other areas will provide us opportunities to grow, like housing, consumer financing. Those areas will provide us growth. Particularly about infrastructure sector, there are opportunities in pockets, like for example, we have built a reasonably good book in renewable energy, and that's an area which is doing well, wind power, solar power, or even some hydropower projects. So that is something which is doing reasonably well. We do believe that there will be good potential in education and healthcare, which are added in the list of infrastructure recently by Reserve Bank of India. So that is something which will grow, and we see a lot of projects coming in that area. Power will be very selective, that is thermal power will be selective, because not many projects are coming up till the coal situation stabilizes. So overall growth will be there, but it will not be a very aggressive growth in that sector.
Specifically coming to housing finance, how do you scale up that business? That's a very small entity right now.
But that's where I think there is a potential to scale up, because not only in larger cities, in the tier 2 cities, tier 3 cities, there is tremendous scope for housing finance to housing to grow. So there are 2-3 things. One is we will grow in the traditional area of financing salary earners for their housing needs. We are also going to work on self-employed category. That is an area which is not largely tapped. I think there is a scope for us to work in that space. We will also, one important point, L&T is also in a big way in construction. So almost all the developers in the country, we have relationship. So we can tag along with L&T's, I mean, we can work or utilize L&T's relationship for this particular business very effectively. So I think it can be a combined offering. L&T will do construction and L&T Financial Services can do financing. So we believe that that business is at the takeoff stage, and given our size, growth is not going to be a problem for that.
In fact, turning to possibly the biggest opportunity, banking. I mean, you are considered to be a front runner when it comes to the banking license.
I don't know that.
How are you gearing up to seize that opportunity?
I don't know that. You're saying that we are front runner, etc. I don't want to comment. What I'm only trying to say is that the way in which this business is built, it is a natural progression, and therefore we will work towards that. There is preparatory work which has to be done. We are seeking clarifications. Our Reserve Bank of India has asked companies to send in their queries, and we will ask some clarifications are required. So till around 10th of April, we'll get all our queries sorted out and work on the plan and then submit. Let's see how it goes from there.
What are the strengths that L&T Finance brings to the table? I mean, when it comes to getting into banking?
I would say that the strengths are the same which are there in the financial services business as such. So there are a number of things which are extremely important for this business. The first is this business is totally people dependent. So your ability to get talent is very critical. I think the parent group as well as in the financial services we have demonstrated, number one. The second important point is financial services business thrives on trust, integrity and governance. And over the last 7 decades, the group also has demonstrated those standards, governance standards, behavior, ethical behavior, values. So that is very, very critical because trust, ultimately trust is very, very important in this business. So that is the second point. Third thing is your brand, distribution network, your presence, nationwide presence for retail portfolio, rural presence. In the last 5-6 years, we have increased our rural presence through tractor financing, through microfinance. So we have today number of offices in the country. So there are several areas in which, but I think more important in the current context is the risk management practices and the governance framework.
Because you score pretty high when it comes to the track record part, a strong capital base. What's your strategy when it comes to financial inclusion?
This is a very, very important subject, financial inclusion, and we are deeply committed to that. And it is even before these guidelines were announced, we had started working for last 4 years, 4.5 years, we are in microfinance business. And even after the problems in Andhra Pradesh, we are continuing in this business and that business is growing now. So we have increased our presence in many countries, many states. So we are not operating in Andhra Pradesh currently. Of course, we are collecting whatever little we can collect, but in other states like Tamil Nadu, Karnataka, Orissa, Madhya Pradesh, we have increased our presence in this business. So that's one aspect. The second point is that today, in terms of rural equipment, we finance almost all the rural needs. Farmers require tractor funding, harvester equipment financing, small commercial vehicles. So the entire gamut we finance. So we have established a presence, and I think that's a growth area for the group.
So will L&T Finance apply for the license, or you set up a separate holding company for that?
I don't know that. We are awaiting some clarifications, and once those clarifications are received, we will see.
But the RBI restriction on CEO salaries of senior employees when it comes to banks, do you think that's a bit of an impediment as far as L&T Finance or any other private players are concerned?
Not really, because there are banks which are operating in the country and they have dealt with this situation. So there are always solutions available, and in my opinion, this is a matter which can be discussed and resolved. And because today there are good banks which are operating, private banks which are operating in India. It's not that private banking is going to start with these new licenses.
Post the sting operation, I mean, new allegations have surfaced against some of the top private sector banks. I mean, do you see RBI being more stringent when it comes to the banking norms now?
Well, I don't know about it, and I also do not want to discuss anything which is speculative in this. The only short point which I am making is that according to me, these are not allegations on the banks. These are actually on some of the employees and maybe some practices.
But the banks cannot shrug off responsibility.
I agree. But I think what probably will have to be done is the norms relating to anti-money laundering and all will have to be more tightened. That's all. But because of that, you see, ultimately one has to take a decision based on what the country needs. Country needs financial services.
Absolutely. In fact, I would also seek your view on interest rates, because there's a growing feeling that because of the very high interest rates, growth is getting affected. I mean, the high interest rates is choking growth, GDP is getting affected. I mean, how do you see that? I mean, do you see the high interest rates to be the biggest culprit at this point in time?
I don't think so, because interest rate is only one element in the entire cycle or structure, if you will. Everything doesn't depend on interest rates. It's an important element, but that's not the only element, because investments, these investment decisions are taken on the basis of various considerations: demand supply situation in the country, globally, which areas are you in, what is the sensitivity of interest rates to the overall returns. So there are a number of factors which influence investment decisions.
So but that's possibly one of the more critical ones.
Not in all the areas. Even if tomorrow interest rates, by the way, I think we need to go back to in the history. When interest rates were high, people were investing. When the interest rates were low, people were not investing. I think you should look at the historical background. It's not necessary when the interest rates came down that the investments substantially went up. And I know when we had these financial institutions like IDBI and ICICI, they have actually they have given money at 16% and 17%. People have borrowed at those rates and also made capital expenditure decisions. So I think what is important is people don't look at immediate future. People also take a long-term view. So I don't think that anybody takes a decision based on immediate future. There are some sectors today which are very sensitive to interest rates. And I think those sectors, the reduction in interest will definitely help. One of the important sectors which is dependent on interest rate is infrastructure sector.
At a time when the finance minister is asking the Indian corporate sector to put in the money, to loosen their purse strings, we don't see investment on the ground.
But as I told you, Abhinav, it is not only dependent on that. Just take an example of steel industry today. Steel is a global commodity, and people will take decision based on what's happening globally as well. It is not necessarily only India. So the slowdown in Europe, the American situation, I think all those are influencing factors before people take decisions to invest in India. So it's not going to be dependent only on Indian situation. There are some sectors, as I said earlier, which are directly dependent or heavily dependent on interest rates. Those should benefit if interest rates come down. Having said that, I think there is a case for some reduction in interest rates, and given the fact that inflation continues to be high and Reserve Bank of India's deep concern, which is definitely something which is not unfounded. However, I think one has to take a call growth versus inflation. Today the situation, in my opinion, is to tilt towards growth.
On that note, thank you very much, Mr. Deosthalee. It was a real pleasure having you with ET Now.
Thank you.